So far, we've talked at length about money going into the Roth IRA retirement account, but what about when you want to start taking money out? Well, first of all, we need to define the difference between your contributions and your earnings. Your contributions is the amount of money that you are putting into the IRA. Meanwhile, the earnings is going to be the amount of money that you made in returns from capital gains as well as dividends. Here's the cool part about the Roth IRA. At any point in time, you can withdraw your contributions from the Roth IRA tax-free and penalty-free, regardless of your age or any amount of time that has passed, because you've already paid taxes on that income. However, if you touch the earnings in your Roth IRA, it would have to be a qualified distribution. Otherwise, you will pay taxes and penalties associated with that distribution. And the penalty is pretty steep. It's 10% on top of any taxes that you would owe on those investment gains. So what is a qualified distribution then? The first rule here is that this needs to occur at least 5 years after the account owner funded their first Roth IRA. In addition, the Roth IRA owner needs to be at least 59 and a half years old in order for this to be a qualified distribution. If you withdraw the earnings from your Roth IRA without meeting those prior requirements, this is considered to be a non-qualified distribution. As mentioned, you'll end up paying your taxes as well as that 10% penalty. However, there are a few exemptions from this where non-qualified distributions can be allowed. If you're using that money for medical expenses, pursuing health insurance, pursuing a higher education, or for childbirth or adoption expenses, there are special circumstances for each of those that you should look into. There is also a first-time home buyer exemption, which allows you or a family member to take a one-time distribution of the earnings early without a penalty, and the limit for that is $10,000. So for the most part, don't plan on touching your earnings in your Roth IRA retirement account until you're in your retirement years, or at least 59 and a half years old. Another huge perk to the Roth IRA is there are no required minimum distributions or RMDs. Certain types of retirement accounts out there require you to start taking distributions by a specific age, but with the Roth IRA, there is no such thing. You can leave your money sitting there as long as you want, and you can even continue contributing to it in your retirement years as long as you have earned income in your retirement years. There you have it, guys. That's everything you've wanted to know about a Roth IRA and then some. If you made it to the very end, make sure you drop a like, subscribe, and hit the bell for future notifications of videos just like this. If you're going to check out the Robinhood IRA and their 1 to 3% match, don't forget to use my affiliate link, which is ryanoscribner.com/Robinhood, or linked up in the description below to get your free fractional share worth up to $200.